All right, welcome to another Bitcoin Intelligence Report show, and I'm here with Alex. How you doing today?
I'm feeling fantastic. I'm looking forward to the
Awesome,
talk today.
awesome, man. So we actually got great news for our BI report subscribers, since we do have brand new Bitcoin charts that we believe are going to help you a lot on your analysis. And Alex, can you show us a little bit of what we have been baking for a while, so that subscribers are going to have access to from now on?
Sure, let's do that. Okay, so um, here we've got a couple of new charts added. So obviously our users are already familiar with the power law. For example, quantile models, the most popular, the most famous models that we've got. However, what I'm going to talk about is the two new charts that have been published on our platform, which is the MVRV and SOPR charts. So
Can you explain that to me as if it
uh,
was a 5-year-old kid that has no clue about Bitcoin? How would you best describe it to simplify things for our audience?
Yeah, of course. So MVRV stands for market value, realized value. Okay. So the purpose of this graph is to give an indication of whether the short-term holders, so this STH stands for short-term holder, which we are defining as people who acquired the coins over the last, approximately within the last 5 months, whether they are sitting on profits, on like unrealized profits, or at any losses, right? So this is essentially what this indicator is supposed to show you. So let me walk you through this a little bit. So on at the top here, what we've got is the price of Bitcoin. Obviously, we can obviously the users would be able to kind of zoom in into different time points. You can zoom in, zoom out. There are different scales on both X and Y axis, and then also move it across any periods of time you're interested in. So the blue curve here represents the price, and then the orange curve here represents the cost basis, or we can call it the realized price. So what that is the average price at which the short-term holders acquired the coins. Okay, so now if we actually zoom in a little bit, for example, let's pick up the 2022 period, for instance. Okay, we
Mhm.
can see that there are times when the price of Bitcoin was sitting above or below this orange line. What that means is that at any given time, the price of Bitcoin could have been above or below the price at which the short-term holders acquired the coins. So the MVRV is really just a reflection of that. So whenever we see an MVRV that is above 1, that means that the short-term holders are sitting on profits, even though they might
Mhm.
not be realized profits per se, but they are sitting on profits. On the other hand, if the value is below 1, that means that they are sitting on losses. And you can see that actually these curves here, actually let me zoom in this a little bit so it's more easy to
Mhm.
see. So you can see that this is the time periods here where the blue curve is below the orange curve, and you can see that it matches the red color we see here, right? So
Got it.
whenever the price is below the cost basis, we get the red, and whenever it's above, like here, then we get a green. Now
Got
because
it.
it's a ratio, then it gives you also like an idea of the percentage that is percentage above the cost basis, or percentage below the cost basis, essentially.
So can I so basically let's say when it's red on the MVRV, and most short-term holders are just an a loss at an unrealized loss, are they more leaning towards just panic selling? What can investors expect? What do you normally see in the cycle that happens when, for example, a lot of people feel that they are currently in a loss? Do you see it just getting worse, or what is the relationship to as the signal really shines for an investor?
Yeah, that's a great question. So essentially, this indicator is supposed to help us understand the market, and particularly it's supposed to help us understand the impact of short-term holders on the price action, right? So, for instance, if the MVRV is above one, if it's significantly above one, say for example, like you can see in this period, he was
Yeah.
three. So
Uh-huh.
the unrealized profits were 3 times the cost basis for the short-term holders. So when that is the case, the short-term holders might be very incentivized then to sell. So that can create a sell pressure, right? So that's a piece of information that might be beneficial for anyone who is trying to understand the market or leverage that knowledge for whatever purpose it might be. Um, but I think what is important to realize is that the Bitcoin market is very diverse, and we don't only have short-term holders, but we've got the long-term kind of core believers. Myself included. So, whenever we are in a red zone, for example, we see that people are, perhaps they see that they are losing, and therefore that could also be maybe a signal for them to kind of reduce their losses or something like that. So then that might be an opportunity for somebody who is really a long-term vision person to jump in and buy the coin. So it's not like a easy yes no answer on how this can be used, but it's just supposed to help us understand the market. And then this depends largely on the interpretation of the market, the different groups and participants, and how the indicator impacts that,
That's fantastic.
essentially.
So,
Yeah.
guys, very, very thorough, and I believe based on the fact that you can also choose, for example, periods of time like a month, 3 months, 6 months, 1 year. So
Yeah.
even if it's more of a short-term kind of trader or a swing trader, like 2, 3 trades a year, or even a long-term holder, I believe this would provide a lot of value for all of those people. Is that correct?
Indeed. I agree with that. Yeah.
Yeah, got it.
Let me just say also that in addition to these indicators on the bottom matching the price and the cost basis, we also can the user can also plot the variability around the cost basis, which is calculated from the MVRV for 4 year period. So we take a 4 year window period, we calculate the variability of MVRV, and then we add that to the MVRV itself, and then we scale it up by multiplying by the cost basis, so that it kind of becomes on this price range. And then it just gives you an idea of the variability of MVRV around the over that 4 year window period preceding any given time point, if that makes sense. Just for the perhaps the more data savvy users, I wanted to add that info.
Fantastic. So, folks, everybody who is already a subscriber can have access to it right now. And in case you just want to have access to it, or it's your first time seeing us, everything is on the link on the description below. And you're able to test this with no commitment whatsoever for 14 days. So we do have a 14-day trial where you have access to all our Bitcoin intelligence reports, and as well as our evaluation models as well. So everything in the links on the description. All right. Now we could jump a little bit to macro, or do you have anything else to show on that end?
Actually, so there are two new graphs that we are adding.
Oh, that's
So it's
awesome.
MVRV.
Wait, there is more. Wait, there is more.
Of course, there are more coming on the pipeline, but today we are just going to talk about these two. So the MVRV that we discussed, and SOPR. Now, SOPR stands for Spend Output Profit Ratio. And what the difference between MVRV and SOPR is that in contrast to MVRV, where we looked at the unrealized either gains or losses for short-term holders, in SOPR we are actually figuring out the actual kind of realized profits, what people actually gained from the sale, what the short-term holders gained from the sale of the coins. Because the way we calculate that is that we look at the price, at the average price of coin when they were acquired, i.e. the cost basis, but then the numerator of the ratio has the price of the coins when they were moved or spent. So when they were essentially spent or sold, right? So that gives you an idea of actually the profits that were acquired. So that's, again, this is a ratio that is either one above one or below one, just like MVRV. And like before, we can assess those periods of time when the users, the short-term holders solely actually realized any gains or received some losses, and we have to look at the values that are either above one or below one on this chart. The top of this graph is the same as we saw for the MVRV, essentially.
Fantastic. So, guys, a lot of stuff, lots of tools that you're able to use. Not only those, but all of our power law, VPLI, psycho model. So it's just getting better and better. So you have a whole toolbox in order to understand Bitcoin. Should we switch a little bit to macroeconomics? A lot of stuff to talk about.
Let's do that. I'll stop sharing now. Let's do that.
Fantastic. So basically, this week, we're going to discuss a lot about that in our next Bitcoin intelligence report. There is a lot. It has a lot to do with the dollar. So we just had a big announcement that I believe Trump's not going to be too happy about that, since we have a whole tension going in what comes to payroll reports. That it just came in very low compared to the expectations of the market. So basically, we are in a situation where bad news is good news for the markets. So unfortunately, if you're a trader, that's awesome because everybody expects for the rate cuts. But at the same time, it's a lousy economy that we are seeing right now. So the real economy and financial markets are really showing a divergence, and this shows into the dollar. So if we see what happens here, so maybe first we start with the S&P 500. It just shot higher today. We're still, we're just close to all-time highs again. And Bitcoin for sure did even more. So as we speak, let me check where we are currently right now. So I always go for the long term. So we are on a reversal right now. So around a 111, 112,000 coming back. So lots of movement short term on the intraday. But this means a lot of liquidity is being pumped into the market. So that's the part that where all risk on assets like Bitcoin, like the S&P, but even gold as here, let me go to gold as a defensive play, but also a liquidity sponge. Everything is going up at the very same time. And especially when we talk about bonds, and people follow us a lot about that as well on monetary mechanics. So you see how a huge demand, so everything around the spectrum is going down. So actually rates all over the place, the 10-year yield, the 30-year yield that everybody was so concerned about, everything is going down at the same time. So this is kind of a defensive play, but it's just liquidity going everywhere to risk on and risk off at the same time. That's where Bitcoin shines as well, as a way to suck up that liquidity. And this just creates the whole expectation of the cuts. Now, if we didn't have any reasons to cut, now it's pretty much sure that the market is pretty much pricing in that we will indeed have cuts. So if you go to Poly Market, for example, let me actually check, because everything that I'm just describing is happening as we speak. So just yesterday, we we did have around 85% uh, of a 25 basis point decrease, so a cut, a one-time 25 basis point cut, and now it's just increased to 88. So the market is pretty sure that at least one cut is going to happen, and this is exactly the kind of things that it's counterintuitive. So bad news becomes good news for risk on assets, and this is the kind of volatility that we might expect as well, because there are actions that are probably going to be happening from the administration, because everything that Trump doesn't want is a bad payroll report or a bad number. Maybe somebody else is going to get fired, nobody knows, but this is just that
Yeah.
turbulence that we discuss a lot about in our Bitcoin intelligence reports. And again, if you want to have more details about everything that we're going to be discussing for next week, you can follow us here and just become
I have a question for you. Do
Go
you
ahead.
think that this reduction in the base interest rate would have as a very very meaningful impact on the Bitcoin price, or just something more soft and negligible?
No, actually, I do have there is an impact, but not because of the reasons many people think. So, unfortunately, we need to think in a way where there is the narrative that goes on and what actually happens on monetary mechanics. Because if you ask me, for example, is that actually going to help? Do we actually need rate cuts? If you talk about the dual mandate of the Fed, yeah, we should, because right now everything is labor over inflation, right? So we forget about inflation. Now we have to save the labor market, as if rate cuts would do that. But because of the way that the liquidity actually works, higher interest rates provide more liquidity and not less liquidity to the markets, because you have more interest to be paid by the government, which is fiscal spending. And we are on a fiscal spending regime. We are in a fiscal dominant regime, like Lynn Auden
All right.
always says, nothing stops this train. So it's actually the opposite effect in the US economy that actually happens when you cut
Okay.
rates. So if you have rates coming down, this is actually liquidity negative, because bondholders are just going to receive less money for whatever they hold.
That's
So
very counterintuitive. That's very
it's
counterintuitive
counterintuitive.
because
It's
yeah,
counterintuitive.
because
Everybody thinks that just drop rates, we have plentiful money and cheaps. But why do we have it right now if we have such high rates already, right? But at the same time, the expectation of the market is, if the Fed does what we expect them to do, it's risk on. Just buy, just keep buying. And that floods the market with liquidity. But this is a short term move. So, yes, Bitcoin actually gets some push of that liquidity coming up, but over time we might see some liquidity negative effects once you see the true monetary effects of that liquidity that might not be there. So it's a complicated thing, but still, fiscal dominance is not something that is going to change in the next few months. So any turbulence that we see right now, we see as a good opportunity to increase position. So very
do you
interesting.
think do you think it's only specific for the United States, or do you think that this is a global phenomenon? I mean, I know that the US has a big debt burden, and that's why the interest expense is so high. I believe it's higher than the military spending, from what I
Yes, correct.
recall. I mean, normally I would have thought, like, if you reduce the base interest rate, there will be more loans, there'll be more money creation, and therefore the price will go up. But you are saying actually the opposite, that
Yeah.
there's going to be less payments made by the government.
Yeah,
Uh,
exactly. Think of it that way. If you, lower interest rates means that more people are buying bonds, and if you have banks buying bonds, that means that they expect rates to be lower and expect growth and inflation expectations also to be lower. They are defensive. If you buy more bonds, you're not actually lending to other people. So you're competing with funds, and banks are actually entities that if you lend to somebody who doesn't pay it back, you get bankrupt because you have a problem in your balance sheet. So this is it's a risk reducing activity. This is defensive. So most people think that once you interest rates go down, it's about abundance of credit. I believe it's the opposite. However, fiscal fiscal always intervenes on those matters, and that's where you have more stimulus, that's where you have more government spending. That is very liquidity positive. So you have all those counter currents, and it's a matter of understanding which of the counter current is going to win, right? It's like a resultant of a specific pool of liquidity in order to understand where it's going. But again, fiscal is really a regime that is taking care of it's basically leveraging GDP in the US. That's why the American exceptionalism is still a thing, but it's very fiscal dependent. And fiscal helps Bitcoin. So this is something that we have to look for. So we can expect volatility. I expect more volatility to come, but I would see that as good news. All right. Hope it makes sense to everybody. So very exciting times, and especially with the new tools. And Alex, you've done a fantastic work with the charts. Congratulations on that. So great addition to the team. And
more is coming.
Yeah, for sure. And yeah, so let's wrap it up. And lots of stuff that will come up on our Bitcoin Intelligence Report number 28. And see you on the next video. Have a great one.
See you guys.
Take care.